So when you are starting off trading, you're looking at candlestick charts, and this is probably the most confusing thing or most confusing period to be in because this is all new. Like, looking at this is stuff you've never really familiarized yourself, and you can see that it just looks up and down, left and right. You know, what is it exactly doing? I would say that it gets a lot easier to understand what price is really doing and, you know, which time frame to look at based on being more and more familiar with the different time frames. So if we go up here, right now I have SPY up because SPY is one of those tickers that moves the cleanest. Everything, it represents the overall market. So time and time again, you will see much cleaner price action. If you are learning to understand this entire chart, I would just say look at SPY as a ticker to understand first. And then from there, you know, you can start looking at different tickers and different stocks. Then you can understand how those are moving. But if you're just starting fresh and just getting your feet wet as to, you know, the introduction to trading, go to SPY. And I would say when you go to the left hand side, this is trading view. There's a lot of different time frames. We have seconds, minutes, hours, your days, and then, you know, it goes like months and months on end. So how do we know exactly which time frame to look at? How do we even understand, how does this tell us exactly how to trade? Majority of traders are going to likely be scalping or day trading. So which time frames should you be looking at to understand what price is doing? Right now, price is at 585.33. How do we know exactly, is tomorrow going to go bullish or will it go bearish, or are we just going to chop around for that day? How do we know exactly where price is headed? What I'm looking for is, I do the top-down analysis. It's basically the same process every time. The more I found that if you develop a process in trading and you follow that again and again and again, then when you get those reps in, the more you have that consistency, then you start to see little intricate details of little differences that will play a big role in knowing exactly what price is really doing. So for the first understanding of this entire chart, I want to look at the 1 hour time frame. The 1 hour time frame is definitely my favorite to look at because it shows enough candlesticks for me to understand the bigger trend, the overall direction. What you will see on every chart is market structure. Market structure is one of the most important things to learn when you're looking at a chart because you'll see bigger dips here. You see a push up, a dip, a high. You know, it just goes up and down. And those are market structure dips. Whenever you see significant pushes away, you see it push down, those are bigger dips and it's market structure. All of that, when you put it together, there's going to be tiny little market structure or there's going to be bigger market structure. And how this is put together will allow you to understand where price is headed. So we can see that on this chart, price is bullish. So we know that price is overall going higher. Price is down here, price is up here right now, so we can see that price is bullish. We know that SPY is in an uptrend. But from there, how do you even trade? Even if price is overall bullish, you're gonna have days where price goes bearish. Sometimes it doesn't matter as much as bigger market structure. You still have to understand what current price is doing within those days to really understand which direction you should trade in. Even if the ticker is bullish, doesn't mean when you're trading, taking calls, you will win in that trade. It could go bearish, and you know, looks like here, we had a couple bearish days. If those days you assume that price would continue higher, you enter for calls, boom, stopped out, and then you're wondering, you know, do you know how to trade? You know, what you're doing wrong? How do you know exactly how you could avoid that in the future? So what I like to do is draw the key levels first. The key levels on my chart are going to be support, resistance, as well as gaps and previous day levels. Those are the most important things for me to draw. And then from there, I analyze the entire ticker as to, is it breaking and retesting an area? Is it just breaking out? Did we just change market structure? Are we in an area where it's choppy? That is how the key levels really give me an idea of where price is going, and so that I can look for entries on the smaller time frame for those day trades. For this chart, I'm going to go to the weekly time frame, and that is going to give me the very strong support resistance levels. That is going to tell me exactly where buyers and sellers are sitting. So the thing about reading a chart is the more you understand where buyers and sellers are sitting, the more you can determine in what areas are there going to be very strong breakouts, or in what areas would it be a higher probability if you trade in that direction away from those bigger areas. What I like to do on this weekly time frame is I really just focus on more current price. Nothing down here really matters since price is pretty far away anyways. So all I'm really doing is drawing like support resistance levels. Right here, I would say this is a resistance support level. I'm really just connecting previous levels from the candlesticks, and that is going to show me that is a significant area. Because price likes to come to that area pretty frequently, that is an area where price will react from. So I can see better setups for maybe a retest or a reversal of that day. So then if we go down a little more, we do see another support resistance area. Keeping it tight, it's just this candlestick and this, you just connect it, whatever's closest really. And then of course up here, this is the all-time highs of SPY. That will also be a strong resistance. And then from there, once I have these support resistance levels, I go to the daily chart, see whether there's any gaps. We have a gap in this area, and so that's going to be an area where I want to mark, because gaps on the daily chart will be areas where you will see price react from. So it could either fill the gap, price goes through it, or sometimes price likes to bounce from them. So these can also act as support resistance areas. This is another gap. We see that price gapped up here. I didn't connect it because price kind of filled the gap slightly. So even if I would have drawn it all the way up here, we can see that current price dipped inside the gap. So I just like to update my levels and keep the gap at wherever that gap has not gotten filled. And then another thing to look at on the daily chart is to look at candlestick patterns. So what we see here is a stronger, support resistance area we drew from the weekly chart. Price broke above it, came back down to retest it, and it looks like we have a bullish harami. A bullish harami is a bullish chart pattern, which shows you that price is likely gonna go higher. So what I'm really looking for is when I chart, the more I chart and the more levels I have, looking at all the different candlesticks and then looking at all the little clues as to what other confirmations that price is gonna go up or gonna go down. If price comes down to a support level, that's an area where price could bounce. We have a support and we have a bullish chart pattern. Likely price may even go up. These are all little clues that you'll see when you chart, and that will really help you understand how to read whatever chart you're looking at. Then you go to the 1 hour time frame. This is the time frame I like to go back to, and then from here, this will be the time frame where I evaluate the entire ticker as to exactly what is going on with the stock, and then I'll be retesting certain levels. What can I expect from the next day? See here, price went very strong, very bullish move. This was from election week, so we have a strong push. Created a resistance. This is all-time highs. Price changed in market structure. So what I like to see is when price gets to certain key levels like support resistance, how does price react off those levels? If we have a market structure change, that is a good idea of price reversing from an area. So this is an area of a lot of selling, high right there, high of all time. And then basically you're looking at the little dips. So you can see this is a dip right there. And then here it looks like it came to the same level. So if price cannot break a certain level, a significant level, this shows that there is weakness, and then you could start to see price go down. So you see right here, price created this low. It did make a high right there, but overall, because price continued breaking down and we broke these two lows, that shows market structure is broken and price is headed towards the downside. So this tells me exactly that price is bearish now. So even with price being very bullish, breaking these stronger resistance levels, price created market structure here, broke down, we're in a bear trend, came down to support, is retesting this support here. We could even change in market structure to go higher since this is a bigger break and retest of a level. Or if price is very strong and we continue the bearish trend, what you will see is price will break this level here. Price bounced off here, went higher. If we break this level of support, and this is also a market structure low, that is confirmation that SPY is continuing the bearish trend. And then you will have a break here, a push lower, and basically you get a gap fill. So the purple zone is where the gap was shown on the daily. If price ends up pushing through and goes down, then what you want to see is that is extra confirmation. Bigger picture bearish, price is filling the gap. then what you want to do is when you go to the smaller time frame, whether you execute on a 2-minute chart or a 5-minute chart for any day trades, then all you have to do is look for confirmation in that continued direction down. That's what I look for. Get that overall understanding of the bigger trend. Where is price headed? Wait for levels to break. Once a certain level like this breaks, that is confirmation that the strength is very strong. So all you have to do is trade with the trend. I always trade with the trend since that is the stronger direction of the market. So then I would just look for an entry for puts to go down. So in a nutshell, that's pretty much how I look at understanding a candlestick chart. Just draw the key levels, support, resistance, the gaps, and then from there pretty much analyze, is structure changing? Is it retesting a certain level? If it just blows through the level, then you know that the strength is still there, and then you want to enter for that continued trend direction. Essentially, this will get a lot easier to understand whether you are trading a certain ticker, like maybe Google, and understanding that if you repeat the process of a top-down analysis, it'll allow you to have more of a routine of charting. And so once you develop that routine, you can pretty much understand right here looks like a support level. We have maybe a double top at a resistance, market structure change, we're now headed down. Do I have to wait for a break of a level to get puts? And then basically that's how you read the chart. I would say just follow a certain process and then it'll get a lot easier to understand direction once you really familiarize yourself with movements of that ticker.